Alright guys, position size. I don't think it's talked about enough, and I'm going to make a bold statement that I believe position size is perhaps the most important aspect if you want to trade going forward for the rest of your life. Okay, trade for a living, trade where you never blow yourself out of the market. Alright, I don't think it's talked about enough. Now, when I say that statement, I guess I'm assuming that I'm talking to people that are already to the point where you fully understand that you have to adhere to your stops. You can't double down and all those things. If you're a brand new trader, I guess you could make the argument that there's more important things than position size. I'm speaking to the people that have already figured out that you have to adhere to your stops. I mean, to me and most of our traders in the room, that's so ingrained that it almost doesn't need to be discussed anymore. But then, newer traders absolutely need to hear that. So with that in mind, the reason position size is so important and so ignored for some reason. All right, let's just assume you're a 1,000 share trader on average. All right, now you have to adjust. If you trade 5,000 shares and you're trading a $500,000 account, 5,000 shares is nothing to you, then you have to make an adjustment to what I'm saying based on your account and your average size. But I'm just gonna, for the purpose of this little mini lecture here, I'm just going to talk about people that average 1,000 shares a day. All right, or not a day, a trade. Okay, so let's take PTEN for example. This is a call we made in the chat room today. All right, PTEN, definitely, let me change my color here. Definitely just straight down off a cliff here. Now, you guys know, and look at the volume here. If you've watched any of our videos, you know I love this bottom feeding type play. There's a couple good things about it. One, you get plenty of volume to make your trade. You don't have to worry about, it's not like trading a base break in the middle of lunchtime where there's not much volume and market makers can toy with you. There's plenty of volume for you to sneak in and get your position filled. And two, the method that we teach gives a crystal clear trigger and stop. Okay, so PTEN, using a method we teach, gave us an entry today at 31.28. So on the next candle, if it got up to about right here, okay, and the stop was only 7 cents below. Now I'll add the next candle. You can see that it triggered, and the stop 7 cents below doesn't get hit. And then over the next 15 minutes or so, it's already in the 31.60s. Might not seem like much, but that's a real nice bounce. And it actually closed strong and never did come back to the entry. It actually closed all the way at 31.82. So ended up moving up to, or 31.83 is as high as it went. On 7 cents risk, from 31.28 to 31.60 something over the next 15 minutes, and it closed at 31.80 without the entry ever getting hit again. 7 cents risk, that's pretty nice, all right? But let's just say you were going to take, now I would say our average stop, if I had to guess, is probably 12 cents. On the setups that we find and call out in our live trading chat room, our average stop is probably 12 cents, something like that, okay? This one was 7 cents. So let's just say you're a 1,000 share trader. If you lose, if you get stopped out for the 7 cents, you're looking at $70 on 1,000 shares, plus commissions and perhaps some slippage. Still underneath $100 probably loss. Now, why is position size so important? Well, before I get into that, let me give me 1 second here. Let me just say that keep in mind, I run a chat room every day with a couple hundred traders in it. All right, running the room every now and then, I will take polls, and we definitely talk a lot about trading mistakes and what's haunting people, people that are doing well, what they could do better. And it's kind of fun to take the polls because they usually end up just like I think they're going to. And position size, I asked the other day how many people have ever been in something way bigger than they should have been and really got slammed by it. And I got a lot of hands raised, all right? A lot of hands raised. And here's the thing. Let's just use this as an example again. PTEN, 31.28 entry. You got a 7 cent risk. Okay, if you normally go 1,000 shares, and let's just say you decide you're down a couple hundred on the day and you decide you really want to make it big, so you go 5,000 shares. Right away, you're out of your element, okay? Even if it moves like it did here, more than likely, if you're in this 5,000 shares, you're probably going to sell it all I guess I could use like 2-minute candles. 5,000 shares at 31.28. You're going to be, for one, so nervous it's going to reverse on you. Again, this is 5,000 if that's way out of your element. Not for a 5,000 share trader. You're going to be so nervous that on this first candle, you're probably going to sell it all or most of it, and you might get $500 out of it because you couldn't really manage the trade right. Okay, you probably wouldn't have held it and sold 5,000 up here at 31.65, even though it hadn't broken below the 8-period moving average, until right here. Again, these are 2-minute candles. So, one, you're not going to be able to trade right, but more importantly, most importantly, if you take anything on 5,000 shares, okay, we were looking at MT earlier today, right in this area, and it actually didn't trigger, but had it broken through somewhere in here, 34.07 or whatever our trigger price was, it could have just as quickly reversed like this. Now, if you're in this 5,000 shares, you might not even be able to honor your stop. Okay, you might get that deer in the headlight look. Whereas if 1,000 is your comfort zone, and again, our average stop is 12 cents, so you're looking at about $120 loss on a 12-cent stop with 1,000 shares. You're in 5,000 shares, you might not be able to take that 12-cent loss. You might say to yourself, there's no way I'm going to lose $600 that quickly. It'll, my wife will kill me, or I just can't stand the thought of that. And when something like that happens, you might end up not honoring your stop. There's a huge danger right there. And one bad trade like that, the thing could drop another $2 and literally take you out of trading for 6 months till you can build the money back up, right? So position size, here's what I said to the room. If you take something way out of your element, if you take 5,000 shares when you normally take 1,000, and you make 15, 20, 30 cents on it a share, and so you have a huge day for yourself, comparatively speaking with your normal days, you still didn't win, okay? You made some money that day, but all you've done is set yourself up for failure because you've taught yourself going big can pay off at times. And it will catch up to you, and there'll be that time that everything will go against you, and it'll erase 3 or 4 of those lucky shots. And at the end of the day, too, if you have a big day because you've done that, here's the most important part, I think, is you didn't make that money because you traded well. You made that money because you got lucky. Okay? So it's not even a win, okay? It's some money in your account that day that the market will surely get back from you the next time you do that. And that's, to me, the most important point. At the end of the day, I would rather look at my trading and say, you know what, I did everything I know to do. I stayed within my parameters and everything, and I had a mediocre day or even a small loss or a small gain. I would rather at least be able to say I honored my rules than to have a big day when in the back of my mind I know I had a big day because I broke my rules and it doesn't really count. It wasn't skillful, and I know it's going to get me later. So I would submit to you, if you're having any kind of trouble at all from going too big and it's cost you, if you want to stay in the game on a regular basis, I would submit to you, spend 5 trading days, write it down, 5 trading days that you will not trade more than your predefined safety parameters. Be it 1,000 shares, it might be 300 shares for you. But at the end of the week, check each day, put a check mark next to it if you have adhered to your limit. Okay? And at the end of that week, I think you'll be pretty happy, for one, that you'll have no big losses, and for 2, you'll just be proud of yourself that you've taken a step towards becoming a professional trader and not making this a gambling game like a lot of people do. So I'm not even going to go into the rest of the trades. I got some brats on the grill. We did have some other nice stuff today on very low risk, but I've babbled enough here. It's almost a 10-minute video, so we'll have a video tomorrow night from our trades in the chat room that we take on Thursday. Have a great night, guys.